Is my voice visible? Is my voice audible? Uh, yeah. So, are you invested in any stock, Kalpesh? So, let us start. Uh, Everyone must be familiar with a trend line. Like this is a trend line, and this time you can see it gives a big movement. But if you draw a similar trend line here, why the movement is not like this one? So we will try to understand this today. Like this time it gave a very fast movement, and this time it is basically going up and down. Uh, uh, are you able to see this? So basically, this is a pattern known as ending diagonal. Ending diagonal is a pattern after which a new impulse begins. And in this case, this is just a corrective pattern because the major move is up here, and this is just a corrective pattern. So we should understand this whether there will be an impulsive move after this or whether there will be a corrective pattern. This is the fifth wave. Let me show you how. And this entire is a fifth wave. How we can find out that is because you can see there will be a divergence. Once we got a breakout of this below this line, you can say the ending diagonal is complete and now a fresh impulse move. This is the same pattern which happened in COVID 2020. So that's why we saw a bigger correction in this. Now many people will say that the correction happened because of COVID, but this is already planned. Like this is a ending diagonal structure, and it was already planned by the big institutes. So let us see what happened here. You can see again there is a divergence between this and this. So basically in Elliot waves, divergence happened between third and fifth wave. So you can see a divergence between this and this and this and this. So after fifth wave, we get an A B C pattern. That's why it's not an impulsive move downwards, and here it was an impulsive move because this is an ending diagonal. Let me show that this on Wipro. So all must be, I mean, there are a lot of questions asked to me that is it a time to invest in Wipro? So my answer is simple. See, go to the weekly chart, see if there is a divergence or not. See, we can see this is third and fifth because there is clear divergence on the weekly. This is bearish divergence, and now price has to correct. You can on plan this in front only, like once a divergence gets formed, the stock has to correct. This is let me count the waves in this. You can see there is a one, two, three, four, five. Don't pay attention to the count. Just you have to find out where is a divergence. Like divergence, you can see here and here. So mark the third and fifth there. And once the fifth wave is complete, you will get a corrective format. So you can see it is not the right time to invest in the stock, right? Because this is a weekly chart and this correction can last over a year also. Because the impulse move you can see from here to here, it started in 20th March 20 and for 1.5 years it continued. You can see the impulsive moves are very fast, but the corrective moves are slow and very narrow. You can see it will be hovering like this only, and it has almost, I mean, it's almost a year the stock is only doing this and this. This is the frustration period, and in this period, you will only see. So, you have to first identify whether the stock is in a trending period or it's in a corrective period. Let me show some other examples. This is the chart of Reliance. Uh, you can see, let me take you to a higher time interval. So this is the quarterly chart of Reliance, where each candle represents 4 months. So let me try to draw the Elliot wave on this. So after fifth wave, so this move is from 96 to 2007. So this is almost a period of 10 years. So after so for the 10 years, the Reliance was an impulsive move from 96 to 2007 and then started the correction period. So this correction period lasted from 2007 to almost 2016. So in this time, you don't have to invest in this stock because this is a correction period and the stock will not move. When a fresh impulse starts, the fresh impulse started in 2017, and you can see again Reliance from 700 to 2800 almost. So you have to be part of the impulsive side only and not part of the corrective sides. Let us I mean come to some lower time interval. You can say this was the corrective field, corrective time. Almost 10 years the Reliance consolidated in this and it gave a breakout. So these sort of breakouts, which are part of 10-year consolidation, are known as multi-year breakouts. Once a stock gives a multi-year breakout, it almost doubles, triples very quickly, and you can see lands from 700 has almost touched 2800 within 2-3 years. So almost 3 to 4 times in 2-3 years. Let me show you Tata Steel also. So many people ask whether it is a time to invest in Tata Steel. Same question, same answer. See, there is a divergence here on the weekly chart. There's a divergence. So this is this will be third, this will be fifth wave. After fifth wave, we will get an ABC correction. So this is A, this is B, and probably now we will get C. So this is not the time to invest in this stock also, because this correction is also from almost August, and it's still going on. It may take more time. See the impulsive move. Impulsive move was from here to here, and it was very fast, and it took almost from 11th April 20th through almost 1.5 years of impulsive move, and you can count the 5 ways also here. S- Now, when do we know that impulsive move is about to end? You can see a trend line is a very good indicator of when the impulsive move will end. You can see once the price was below this, the impulsive move was ended, and you can see that between this and this swing there is divergence also. So this becomes a third, this becomes a fifth, and after fifth we will get an ABC correction. Also, while initiating long-term investment, uh, now you can see this is a pattern known as inverse head and shoulders pattern. So you can start your investment after this, because this is a reversal pattern, and you can see that this is the third wave. The third wave of Elliot is the most powerful, and all the sentiments will be very good for this stock in the third wave. Once the third wave is done, you will see the third wave ended here. You will see that the the big institutes will now start booking profit, and in the fifth wave only retailers participate. So that's why they already know that all the move is now discounted and it will not move much. So fifth in the fifth wave only retailers have participated, and you can see the volume also dropped in the fifth wave. You can see there was a massive surge in volumes in the third wave, but in comparison to the fifth wave, you can see there is a very little volume, because large institutes are not participating in this move, and only retailers are participating in this. So that is why the fifth wave is also known as the retailers wave, because the institution are already booking profit, and it is only the retailers who are getting trapped here. So if you are familiar with these little concepts, you will never fall in the trap of big institutes. Uh, is there any question as of now? See, this is a different chart. This is a Bitcoin chart, but same concepts apply here. Every This is the monthly chart, and you can see there is no divergence as of now. So there will be a pending fifth wave in this. Once the fifth wave is found, there will be divergence between this and this, and that will be the time of booking profit in Bitcoin also. So there will be one possible up move in Bitcoin also, because the concept is similar. If the bearish divergence happens in the third and fifth, and on the monthly chart there is no divergence as of now. if you are, I mean, planning an investment in a stock, then you should always the wave analysis, like always go to the higher time interval, like in the weekly chart, and then go to the smaller ones, like because let me show you this also. If you are doing an investment which you want to hold for a period of 1 and 1.5 year, always go to the weekly chart. If you are planning a swing trade, then you should go to daily chart, but you have to keep track of the weekly chart also, that what sort of wave is this, because if this is in this type of, it is a corrective on the weekly chart, then even if it gets bullish, like here, even it gets bullish on the daily, you don't have to take these trades, because overall the structure is in a corrective pattern only. So I hope I you got the answer, or you want some more. Always, as per Elliot, divergence happens on the third, between third and fifth. So you can see, you just need to find where is the divergence. This is the divergence, and then the correction will start. But you cannot predefine this, because I mean, if you see divergence and directly start shorting, because it is not necessary that it will fall. It will, corrective pattern doesn't mean that it will fall. See, in the bank nifty chart we saw that it's a corrective pattern, it is not falling, eh, because it is not an ending structure. Ending structure is something like this, which is the ending diagonal. So you have to observe that what sort of corrective pattern we are getting. Is this a correction, or this is a start of new impulse on the downside? Here the trend is up and corrective pattern is small. Here the trend was down and the impulsum on the down was large. Okay. And when to know that correction is ended, let us talk on that. So basically, this point, when the price starts to trade above this is the point when correction ending. So in probably in our next webinar, we will talk about what sort of correction patterns are there, because this pattern is known as contracting flat, contracting flat, and this ends when price goes above this. And there are other patterns also. There are running flats, expandable flats. So once you are able to identify this, you will be able to, I mean, very clearly see every chart. Like in Wipro, let me show you. You can see this is a very fast move. This is not a correction, but this is a very fast move. So this is known as a flat. Uh, when after impulse is over, you get a very fast move to the downside, and this will get over once price gets below this. So now you can get a buying opportunity also in this, and because the major trend is up, you have to look for buying opportunity also, but you can get a next impulse in the downside also, because we are not sure this corrective structure is over, but next impulse will be upside or downside. We are not sure about that also. But if you go to the higher chart, the higher chart is still, the corrective pattern is not over, which means for many months it can form this A B C pattern, which means because the corrective major impulse move was over, and you can to see in this chart, you have to see what is monthly also saying to you. Like the correction in weekly is over, but if you go to monthly chart, the correction is still not over. So likewise, you have to travel from the higher chart and go to the, I mean, you can go as low as early chart, but you should not go below early for that, because then you will get very false signals in this. Yeah, ending diagonal and similar chart was in Nifty also. The main characteristics of ending diagonal is that price is making a new high everywhere, and you will see there is clear divergence in, and in three peaks the price is always trending. This peak is above this peak is above this. So whenever you see pattern like this and price starting to move below this point, there will always a very fast down move, and this is the time to buy options, put options. But if you are getting normal correction, then you have don't you can sell the call, but you don't have to buy the puts. So is there any other question? So let us, I mean, close this stream today. Other participants will also join, and we can, I mean, discuss what are the other forms of correction, because it's very easy to identify impulsive move, but it gets hard to identify whether this is a corrective pattern or it's a next impulsive move to downside. So we will learn about those in maybe in the future streams. So thank you for visiting. Let us join next time.